Imagine buying your dream house without a bank, without a bond, and paying it off like pieces in a lay-by at a clothing store. Sounds too good to be true, right? Well, in South Africa, it's very real. It's called an installment sale. Today, I'm breaking down exactly what it is, where it started, why it exists, and who should be actually using it. Welcome back to this channel. If you're new here, we talk real estate, we talk everything to do with finance and all the tools you can use to build your wealth in South Africa. So hit the subscribe button and let's unpack this elephant of a topic, installment sale, right? So now, before we dive into the definitions, let's travel back in time. The concept of installment sale in property was formalized in South Africa through the Alienation Act of 1981. You will ask, why 1981? Well, before that, buyers and sellers were doing handshake deals, right? They will pay each other little by little. The seller kept the title deed, and only after the full payment you will get ownership. But then this may lead to a lot of problems. Sellers could sell the property to multiple people. Buyers had no protection if the seller decided to cancel. Disputes ended up in messy court. So the government decided to step in so that they can regulate this process, making sure that buyers and sellers are both protected. That's why we have the installment sales that is done legally today. So what is an installment sale? An installment sale is when you buy a property and agree to purchase the property in regular installment over a period that is longer than a year but less than 5 years. That's very much important, and I will repeat that again. So you buy a property in installment that is paid over a period that is longer than a year but less than 5 years, as set out in the Alienation Land Act. Key things to take out here is that you take possession of the property and you can live in it or you can use it. The seller keeps the title deed until the last payment is made. The contract must be in writing and recorded in the deeds office to protect both parties. Think of it as buying a car through financing. You drive it and you take control of it, but the bank owns it until you have paid it off. Same principle with property, right? So let's be clear about what installment sale is not. If it's not a rent to own, right? With rent to own, you are a tenant with an option to buy later on, right? But with installment sale, you are already the buyer. It is normal. It is not normal bond from the bank, right? No bank is financing you. It's between you and the seller directly. So it's not an informal backroom deal. By law, it must be registered and written down properly, right? So why do people use actually installment sale? You can be asking yourself. So let's start about why buyers will consider buying a property through an installment sale. You will need to qualify. You don't need to qualify for a bank loan, right? And this is great for people that has a very shaky credit score. You get possession of the property right away. You can move in or you can rent it out, right? Payments are spread out, making it much more manageable, right? But for sellers, they can sell to a bigger pool of buyers who don't qualify for bank loans, right? And if the buyers default, and this is the nice part, they keep the property and the payments that are already made at any point and given time. So if I give an example, if you paid that property for 4 years and the agreement is 5 years and you default on the 4th year, you lose that whole money as the buyer. How nice is that for the seller? But you must not just go for it just for this, right? So who should consider buying via an installment sale? One, first-time buyers who can't qualify for a bond yet, right? Self-employed people with irregular income who banks sees that they are risky people, right? or buyers who want to secure a property now while sorting out their other financial stuff, or investor who spot a great deal but they don't want to go through the bank. Basically, anyone who wants ownership but doesn't want the headache of the bank saying declined. But wait, it's not all sunshine and elephants in the room. If the seller has a bond on the property and they default, the bank can repossess it. Even if you are paying, if the contract isn't registered at the deeds office, you have no protection. You are still liable for rates and taxes and your insurance during the contract, right? So an installment sale can be a very powerful way to get into property in South Africa if it's done right and legally. Question of the day: would you consider buying your home via an installment sale instead of going through the bank? Will you? Drop your answer in the comment section. I want to hear how many of you will take that leap of faith. Don't forget to like this video, share with your friends who's house hunting, right? And subscribe for more property tips. Until next time, this is the big elephant, Dokuria Manage. Cheers, I'm out.